This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pachordes. Thanks for joining us at S&amp.com. Equity markets look set to end the week on a sour note as investors finally seem to be heeding the message from the Fed that the rate hike cycle has some way to go following a series of hawkish commentary this week from Fed officials. Fed Chair Powell's balanced tone on the inflation outlook has been overshadowed by sterner language from his colleagues about the risks from easing up on rate increases too early. Initially, markets fell for Powell's somewhat less hawkish stance, but sentiment started to shift after last Friday's super hot jobs report. There's no doubt that the NFP shock was a game changer, and the yield curve between 2- and 10-year yields is now the most inverted since the early 1980s. Whilst this does not necessarily mean that a recession is a foregone conclusion in America, it does nevertheless underline the stress in the markets about the Fed lifting rates too high, and this is a problem for Wall Street. Both the S&P 500 and NASDAQ are on track to end the week lower. Investors' main focus now is on the January CPI numbers due next Tuesday, as they could be the only thing to halt the rise in yields in the short term if they are soft again. The US dollar continues to drift somewhat lower on Friday as it struggles to build on the post-Fed bounce from last week. The main drag on the dollar index is the yen. The Japanese currency is up across the board after jumping on reports that former board member Kazuo Ueda is being billed as the likely nominee to head the Bank of Japan. Ueda may not be that much less dovish than the previous contender Amamiya. Nonetheless, there seems to be some relief among yen bulls, and the dollar briefly slipped below 130 yen earlier in the session before paring its losses. The Canadian dollar, meanwhile, was slightly firmer ahead of Canadian employment figures due later in the day. The jobs data will probably not have much impact on the domestic policy outlook, but higher oil prices are supporting the Loonie today. Oil futures surged by more than 2% after Russia unexpectedly announced a cut in crude production of up to 500,000 barrels a day. This was today's Daily Market Comment. Thanks for joining us at XM.com.